So I'm going to jump and take a question if that's okay with my colleagues. And I'm sorry that, Toby's not here, so we can't.
No, he
jump
does a
in
much
there.
better job of selling.
No,
our
no,
index than
no,
I do.
no. There was a question, I think, for you and perhaps from our guests who haven't spoken yet from Dominate Social Investments, and even for the American Petroleum Institute, that one of the debates that brought up today is how are the returns on petroleum products, and wouldn't we be sorry if we weren't invested in them? And then depending on what years you pick to evaluate, you can all come up with different findings, which is the truth all the time with evaluating the stock market. So I'm going to sort of jump to you now, Tom, and maybe when Carol testifies, she'll think about the question also. Historic patterns of returns on fossil fuels really have shifted very quickly into a plummeting story. Why should we believe that the plummeting story is the new normal as opposed to it's just one of those glitches, and you take any 7 or 10 year period in history and you see some folks are doing better, some folks are doing worse? Why should we, the public, or we legislators, accept the fact that the new normal in fossil fuels actually is a downward spiral, as opposed to, pick 2017 and maybe we'd get a different story than what we're seeing in 2016?
Quite honestly, the future is unknown. We don't know what's going to. Tomorrow there could be a new discovery on carbon sequestration technology that will turn everything upside down, and that would make but that's not. That seems a very unlikely situation. The status quo is that energy policy is turning against continued reliance on fossil fuels. And the assets that these companies hold are very much at risk, and it's substantial. I mean, it is a lot of, when you say 100 times of our current emissions, our current use of fossil fuels, that's quite a bit of resources, and it's very valuable. I don't know that you want to be invested in that as policy and just our energy use changes, and that's looking into the future is just a risky business that I'd hesitate to do. I mean, you can look at the last 50 years, and I think the API did this. Did you do the Chicago Dr. Fischel?
Yes.
Yeah. So that was looking at 50 years of history, and oil and gas stocks did great. But I mean, those 50 years were great years for oil and gas companies. You can't. I don't know that we're going to repeat that. We're really talking about the next 50 years, and it's I would say that the oil and gas companies will not be treated the way that they were over my lifetime so far. So,
Thank you.
I hope that.
Felix, Brad?
Quick question. Could you describe the associated risks in petroleum stocks, given investigations, inquiries by attorney generals like Eric Schneiderman regarding big oil's complicity in not disclosing the impact of climate change to their investors?
I spend a lot of time on reserves, investigating reserves, recently a lot on tar sands. I don't know that I could really address that adequately, so I won't pick up your time on it.
Would you acknowledge that there is a risk?
I think there is very much a risk, but
And doesn't the risk have that has an impact on, obviously, a return and the value of the share price?
absolutely, I would agree entirely.
Thank you.
You're welcome.
Thank you very much, Tom.